All right, let's get right into it. Welcome, everyone, to today's Explainer. We're looking at a truly fascinating piece of corporate reporting today, Alamos Gold's Q2 2026 earnings presentation. Now, you know mining is a complex beast, where global macroeconomics clash right up against physical, earth-moving reality. And man, this quarter, Alamos Gold gave us an absolute masterclass in how those two forces interact. We've got incredible financial tailwinds meeting some very real physical headwinds on the ground. It's a brilliant case study, so let's break it all down step by step.
So here's our roadmap for this explainer. We'll start with their strong Q2 financial results, then navigate the 2026 guidance revisions, dive into Island Gold's record performance, check out the Young-Davidson and Mulitas updates, and wrap things up with the long-term outlook.
All right, Section 1, strong Q2 financial results and that record cash flow.
$144 million. That is the consolidated free cash flow Alamos Gold generated in Q2 2026 alone. To put that into perspective, we're talking about a massive 70% increase year over year. This towering number absolutely sets a clear tone of financial robustness for the company. While they are heavily investing in future growth, their current operations are just churning out cash at a remarkable rate. Looking at the first half of 2026 compared to 2025, the growth is frankly staggering. Net earnings skyrocketed by 164%, jumping from $175 million up to $462 million. Meanwhile, operating cash flow leapt by 70%. The real engine behind these numbers? Well, it's a highly profitable realized gold price of $4,660 per ounce in the first half of the year. When you combine those kinds of high commodity prices with steady operations, the resulting profitability is intensely powerful.
Moving on to Section 2, navigating 2026 guidance revisions and some operational hurdles.
As any miner will tell you, a record high gold price unfortunately doesn't make the rocks any softer or the weather any more predictable, right? Alamos had to adjust their expectations for the rest of the year due to kind of a perfect storm of delays. We're talking a seismic event temporarily disrupting Young-Davidson, labor and contractor inflations, specifically due to a highly competitive environment up in northern Ontario, and delayed leach pad recoveries at La Grande. It's basically a combination of physical, economic, and chemical realities all hitting at once. So when we contrast the previous guidance with the revised numbers, production expectations drop by about 12%, down to a range of 510 to 560,000 ounces. And because of that, the all-in sustaining costs, or AISC, pushed up by 18%, moving to the 1,775 to 1,875 range per ounce. But take a step back here. Even with an 18% cost increase, when you're realizing gold prices well over $4,000, that core financial engine remains highly, highly profitable.
All right, Section 3, Island Gold's record performance, a true star player performance.
If Young-Davidson faced some hurdles this quarter, Island Gold was definitely the star player offsetting those hiccups and really driving the company's long-term future. Just looking at the Magino Mill complex, you can truly understand the sheer scale of their operation. This infrastructure drove combined milling rates past 10,000 tons per day in the quarter. It's a total hive of activity that is fundamentally transforming the production profile of the company.
And they're being incredibly strategic to achieve those numbers. By supplementing the main feed with a temporary crusher right alongside the existing circuit, they've managed to push milling volumes to absolute record highs. It's a stellar example of operational agility, finding a bottleneck and deploying a temporary, highly effective solution just to keep that gold flowing. Meanwhile, the underground operations are climbing this beautiful staircase of growth. In Q2 2026, they hit a record 1,550 tons per day of underground ore. But look at these projections. They're targeting 2,000 tons per day by the end of 2026 and 2,400 tons per day by Q1 of 2027. This underground ramp-up generated an impressive $100 million in mine site free cash flow this quarter alone. I mean, it is a cash-generating machine that's essentially funding its own expansion. So how does this all come together? The Phase 3 Plus expansion project is mapped out with real precision. In Q4 2026, we'll see the paste plant commissioned. Then, by Q1 2027, the vital Phase 3 Plus shaft commissioning will be completed, which, by the way, is exactly what unlocks that 2,400 tons per day mining rate we just talked about. Finally, by Q1 2028, the entire Island Gold District expansion will be complete. They are executing a massive, multi-year, highly choreographed build-out. Let's move to Section 4, Young-Davidson and Mulitas updates.
looking at the other core assets. To give you a complete, well-rounded picture of Alamos Gold's portfolio, we definitely need to check in on the other core assets, starting with Young-Davidson. Now, as we mentioned earlier, Q2 was tough here. A seismic event, combined with some pretty severe weather-related power outages, restricted production to 33,000 ounces. To be really specific about the impact, the main issue is that this event deferred access to the higher-grade stopes on the 9410 level. It basically changed their mining sequence, forcing them to process lower-grade ore than they had originally planned for the quarter. And because of that seismic event, safety and stabilization are understandably the top priorities. The company has earmarked a specific $10 million sustaining capital investment for the second half of the year. This money is entirely dedicated to essential rehabilitation and implementing enhanced ground support. Honestly, it's a completely necessary expense to safely get back into those higher-grade zones and ensure the longevity of the mine. Then we have the Mulatos district, which really acted as the steady anchor for the portfolio. In Q2, Mulatos quietly generated $61 million in mine site free cash flow, producing just over 30,000 ounces of gold. And over at La Yaqui Grande, they stacked 9,100 tons per day. When a mine like Young-Davidson has an unexpected hiccup, having a stable, cash-flowing asset like Mulatos is exactly what provides that crucial buffer for the broader corporate portfolio. And finally, Section 5, the long-term outlook and their strategic vision. So why does all of this matter to you, the focused learner, analyzing this company's trajectory? Well, amidst all the talk of sustaining capital, AISC margins, and tonnage rates, it is so vital to remember the human element here. Executing these operations safely requires a dedicated, highly skilled workforce. They're the ones actually on the ground, navigating the seismic events, dealing with the harsh northern weather, and commissioning the new shafts. And here is the ultimate goal they're all working towards. Despite the near-term headwinds in 2026, the company's overarching target is approximately 1 million ounces of long-term annual production. That represents a massive 83% growth from their 2025 base. And even better, this substantial production growth is supported by a robust 17-year average mine life. Because they're currently investing so heavily in infrastructure like that Phase 3 Plus shaft, they're setting up a significantly declining cost profile from 2027 onward. Which brings us to our final thought. We've seen the incredible cash flow, the unexpected challenges at Young-Davidson, and the relentless build-out at Island Gold. So with a 17-year average mine life and clearly declining costs on the horizon once expansions are complete, how will these near-term operational headwinds ultimately shape the long-term value of the company? It's a fascinating question of short-term friction versus long-term vision. Thank you so much for joining me for this explainer, and as always, keep asking the big questions.